shaping up for stocks. Dow is up more than 400 points this hour. Want to hit some stocks before we do final trades. One in particular, GM. Citi goes to $70, the highest on the street.
And Sarah and I are both in this thing. We both love it. Here's the thing. Everybody has been calling for years for peak autos, and the EPS is going to go down. Finally, the street is recognizing that earnings per share this year are going higher than last year, and that's the trend that's going to continue. GM's an easy long here.
Okay, we got 30 seconds left, so let's do final trades. Joe, you're up first.
I bought back into Northrop Grumman, and I would say watch Apple and Amazon. They'll tell you where the market's going.
Steve.
Google, I think you have to buy it here. It's got a lot of upside, still doing more than 10% from the high.
Surratt.
Prudential, stock came off after earnings, interest rates going up, I'm a buyer.
Doc.
FXI, ETF for China, bought it today.
All right, we end up with Jimmy.
Alexion bounces back. It was terribly oversold last week.
All right, guys, good stuff. That does it for us. Dow, as we said, 400 points. Power Lunch begins right now.
It does indeed, Scott. Thank you very much. Welcome, everybody. I'm Tyler Matheson, and here is what is on the menu for a Monday. Another big rally on the street. Is the bottom really in now, or is a bigger shakeout still ahead? Either way, we've got some names that look pretty cheap right now, so get out your pencils, your shopping list. We're going to go stock picking. You can email us your questions at powerlunch@cnbc.com, and we'll answer a few selected ones this hour. President Trump unveiling his big infrastructure plan. Along the way, the White House also releasing a $4 trillion budget. And what chance does either of these proposals have of going anywhere? We'll take a look at that as Power Lunch starts right now.
All right, welcome. As Tyler said, your money making a huge comeback today. Stocks bouncing back for the worst week in 2 years. The Dow's at 423 points. The action, though, really coming in the bond market. Borrowing costs continuing to rise. Yields in the benchmark 10-year note climbing back to 4-year highs. They are just under 3% right now. And perhaps that is spooking investors in consumer-related stocks. Some retailers are seeing losses like Guess, Ulta Beauty, and TripAdvisor. They're leading the declines. It is, though, full steam ahead for rail company CSX. That stock higher after raising its dividend. No whopper here. Burger King's parent beat the street. That stock up, and First Data rallying on its revenue beat. Courtney Reagan, welcome.
Thank you very much, Brian. It's great to be here. We begin this hour with the big rally. The Dow soaring, the S&P 500 back above its 100-day moving average. Bob Pisani is at the New York Stock Exchange. I don't think he has whiplash yet. He still looks pretty good. Bob, what's going on here today?
Actually, we're getting, except for the point moves, a quasi-normal day in volume and volatility. Surprising. Look at the sectors here, the old growth sectors we used to talk about. 10 years up, and REITs are down, of course, so that's not surprising. But broad rally. Let's take a look at the markets and where we're at. Breadth is good, 5-2, advancing to declining stocks. Those are good numbers overall. The volume, believe it or not, just average. We've had enormous volume in the last week and a half, not today. Volatility's been dropping throughout the day. It's in a fairly narrow range. Again, a little bit unusual compared to the last week and a half here. With the peak gains today, the three major averages have now recovered nearly half of their losses, believe it or not. My thanks to my old producer, Robert Hem, for that. 2,800, we were down as much in the Dow, and look, we've regained about half of them, almost 1,300 of those points. This is moving so fast. This morning and over the weekend, the big debate was very simple. Do we have a tradable bottom or not? And a lot of people were arguing on one side or another. Positives, well, we have the average issue was down 14%. That's a lot. The indices are way oversold. Buy right now. Tradable bottom. A lot of the negatives, people coming out and saying, guys, it's only 6 days old. This is too soon to tell us whether it's there, and it's a technical correction. That's not a good sign. They said, well, if fundamental correction would have been better overall for the market. So a lot of debate about that. But now it's moved so fast that the debate in the middle of the day is, have we gone too far too fast? There's a lot of weak longs that are out there. That is weak hands. People just come in recently, and a lot of people are saying, geez, it's gone so fast, I think we need a retest of the lows. Mark Fisher was just on our air an hour ago arguing exactly that point. Boy, it is moving quickly. Guys, back to you.
All right, Bob, thank you very much. Markets on a bit of the comeback trail today. Some people, of course, blaming the rise of the machines for all of those wild swings last week. So how worried, if at all, do investors like you need to be about the increase in programmed trading, algorithmic trading and the like? And more importantly, have we hit the bottom? Lori Calvasina is head of U.S. equity strategy with RBC Capital Markets, and David Lafferty is chief market strategist with Natixis Investment Managers. He manages close to $1 trillion. David, thank you for coming, and Lori, as you